Now it's our pleasure to bring in Edward Yardeni, President and Chief Investment Strategist, Yardeni Research. Edward Yardeni, what a pleasure to have you on the show today.
Thank you.
A lifetime of experience, obviously, in this market. I've watched you for many, many years. It probably even booked you at the Wall Street Journal report many years ago when I used to work there. It's our pleasure to have you on today. Give us some perspective on what we're seeing right now. You know, as we cross Dow 35,000, may have the first close ever. The volatility we've seen, is it noise or are we really in some sort of uptrend?
And we're definitely in a bull market. The bull market started way back when in March 2009. We had a pretty awful test of the bull market last year because of the pandemic and the lockdowns. And the Fed came in on March 23rd of last year and poured liquidity into the system. And the stock market did exactly what it always does when this has more liquidity than it knows what to do with. It goes up. And it's been pretty hard to get a correction. On Monday, we tried to have a sell-off. It was pretty significant there on Monday, but it's gone. And here the market continues to march higher. So I think the fundamentals are good. The liquidity is good. Interest rates are low and valuation is overwhelming.
So fundamentals are good, this liquidity is good, and what would you tell? Obviously we have Federal Open Market Committee next week. Everybody's really anticipating Jackson Hole meeting as well and what they may hear from there. You know, there are some who are in the camp that Jay Powell and his team should have acted yesterday, and there are some who say, look, we have some back and forth choppy action and let's wait. And the Fed's doing exactly the right moves. Where do you stand?
Well, I try not to intervene with the policymakers. Whatever they're going to do, they're going to do. I try to anticipate what they're going to do. And Fed officials have always been very forthright, especially Fed chairs, in terms of what they intend to do. And this Fed chair has been very clear that he intends to keep interest rates as low as possible for as long as possible. He intends to keep buying $120 billion per month for as long as possible. Everything's is going to be pushed out, and all that liquidity is overwhelming, and it is likely to keep the stock market moving higher. I think there will be more discussion of tapering, but not in the next few months.
Right. So you're doing your best to just anticipate what they're doing and react to any moves they may or may not make.
Bullish.
I know you're watching the PMI composite flash number this morning, right? 59.7, but services slipped, manufacturing moved a little higher. When you look at that PMI composite flash, you don't just look at the headline number, right?
Well, yeah. I mean, the important thing to realize about the PMIs is they are so-called diffusion indexes. They are basically asking the question, how's this month compared to the month before? So they're very cyclical. They don't have a trend, and they can't go up forever. And they were going up very substantially, making new record highs around the world until the past few months. You know, basically what companies are saying, things are still very good, but they're really not much better than they were the month before. And I think we're also starting to run into some of these issues with shortages and issues with supply chains that have also kind of put the lid, if you will, on the PMIs.
So when we look at that, I think the big part is you're right. We're not seeing huge growth from the month before. In fact, jobless claims were a little weaker this week, right? You saw more people filing for claims, so the continuing claims was the good news. But within that PMI number, right, services slipped, manufacturing a little higher, but the trend seems to be going in the right direction. And that being said,
they're all solidly over 50, which is really what matters. And that suggests the economy is doing fine.
Right. Contraction versus expansion. Monday's pullback, Edward, did you at that point say, hey, this is a buying opportunity? I know it's Monday and, you know, hindsight's 2020, but only to say, the only reason I ask this is because if there's another pullback, would you say that's a buying opportunity? And what would you buy?
I think it's hard to get corrections of any magnitude when there's so much liquidity around. You know, M2 is about $5 trillion higher today than it was right before the pandemic. So there's still a tremendous amount of stimulus just sitting in liquid assets, and that could certainly continue to pump up economic growth, push up inflation. It's very bullish for earnings. We are in the earnings season, and it looks like earnings are going to be up at least 66%
Right.
on a year-over-year basis. And I think what you buy is the market. I think it's a broad-based bull market.
How do you do that?
Well, I think you can certainly buy an ETF. There's lots of ETFs that represents the overall market. But of late, we've seen the Nasdaq, the growth stocks make a significant comeback because the bond yield just remains extremely low, and so buying the S&P, buying the Nasdaq is perfectly fine.
Ah, yeah. Well, you got to what I was looking for, Edward. I was going to say, if we were friends and we were having coffee and I said, if there's a pullback, what should I buy? And then I was going to say, both the S&P and NASDAQ or just one over the other? And you answered the questions. So get in and buy because you think that this is a long-term bullish run and trend that continues.
I do.
Edward Yardeni, I love our conversation. I hope you'll come back soon and we can chat some more.
Thank you so much.
Thank you very much. President and Chief Investment
pleasure.
Strategist, Yardeni Research.